Welcome, crypto fam, to No One Daily Bitcoin Pod. In today's show, I'll be sharing the latest technical analysis as we just recaptured 85 G's, baby. Also, breaking news, payment giant Mastercard said it wants to enable 3.5 billion cardholders to move Bitcoin and crypto. Quoting them here, "We've made a sizable bet on this. Let's freaking go." Also, Metaplanet adds 67 million in Bitcoin following a 10-to-1 stock split. And as you know, their goal is to acquire a total of 21,000 Bitcoin by the end of next year. We'll also be discussing Bitcoin could reduce the dominance of the US dollar, according to the largest asset management giant in the world, BlackRock. We'll also be discussing Trump family launches the American Bitcoin mining venture in partnership with Hut 8. Let's go. We'll also be discussing Arthur Hayes' Just Blaze predicts $250,000 Bitcoin price action as the Fed caves to the QE pressure. Also, breaking news. The Bitcoin Policy Institute just released a framework for the United States of America to buy $200 billion worth of Bitcoin by issuing $2 trillion worth of BitBonds. And hypothetically speaking, they can acquire roughly 2.2 million BTC. We'll also be taking a look at the overall crypto market. All this, plus so much more and more in today's show. Welcome, everyone. Just joining us, very important. Smash the likes, help support us, subscribe. We're the #1 daily Bitcoin pod. We've been doing this literally for almost 2,000 episodes. We're approaching here in the next maybe 50 days or so. Today is episode number 1950. I'm your host, JV. It's April 1st of the month. So happy 1st of the month, fam-a-lam. And the markets are back in the green. Bitcoin up 1,600 on the day. So let's check her out. Kick it off with our market watch as we do each and every day. Biddy in the green, Ether in the green, XRP in the green, BNB in the team, green, Solana green, Cardano green, everything green like the Incredible Hulk. And checking out CoinMarketCap.com. The current crypto market cap back on a rise at 2.75 trillion. The Bitcoin market cap back on a rise, just shy of 1.7 trillion. And checking out the 24-hour volume looks like 78 billion for the past 24 hours. And the Biddy dominance, 61.5%, with Ether dominance at 8.4%. Checking out top 100 crypto gainers past 24 hours. EOS leading the pack, followed by Zcash, followed by Berachain. Let me know which alt, if any, you're bullish on for the bull. Holla at your boy, forever hold your peace. And checking out the crypto bubbles, we get a visual perspective on the day. 90% of the market in the green and pumping. We love to see that. Zooming out on the weekly, unfortunately, 90% of the market in the red. Zooming out on the monthly, Rex City, even Trump meme coin down 32% in the past 30 days. And checking out the crypto greed and fear index. Today we're at 34 fear. Yesterday 34 fear. Last week 46. Feel like the mainstream media. Fear, fear, fear. Last month 26 in fear. But remember, an acronym for fear, false expectations appearing real. So don't get her twisted. And we're currently on block height number 890,419. We have 159,581 blocks until the next halving of 2028. And you currently exchange one fiat monopoly dollar for 1,172 Satoshis. So stack the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. Let's kick it off next. Now we did our market watch with a little Bitcoin technical analysis, aka astrology for the broskies. And I promise I'll pull up some of the live charts for you guys. Headline reads, Bitcoin price gearing up for the next leg of acceleration phase. According to the Fidelity Research, Fidelity being a major asset manager, their report questioned whether the Bitcoin price already seen a cyclical blow off top. I think not. And whether it's on the cusp of another acceleration phase. That's right. According to Fidelity analyst Zach Wainwright, Bitcoin's acceleration phase are characterized by the high volatility of the high profit, similar to the price action when Bitcoin pushed above 20,000 back in December of 2020. Damn right. I remember back in March of 2020 after Novid, Bitcoin crashed like 4,000. And 12 months later, March of 2021, we soared over 10x to above 60,000. And we hit the cycle peak that year, November of 2021, at 69 Gs. So Bitcoin literally soared from 4,000 to 69 in just over a year. Will it happen again? You let me know your thoughts. And now while Bitcoin's year-to-date return reflects 11% loss, the asset's down nearly 25% from the all-time high, which was achieved on Inauguration Day in January. 1093 is the current all-time high, family. The analyst said the recent post-acceleration phase performance aligns with the Bitcoin average drawdowns compared to the previous market cycles. And here you can see in the chart, Bitcoin historical downside after acceleration phases. Now, Wainwright suggests that the Bitty is still in the acceleration phase, but it is moving closer to the completion of the cycle, as March 3rd represented day 232 of the period. Previous peaks lasted slightly longer before the corrective period set in. Quoting the analyst here, the acceleration phase of 2010 to 2011, 2015, and 2017 reached their tops on day 244, 261, and 280, respectively, suggesting a slightly more drawn-out phase each and every cycle. Will history repeat, or will it rhyme? You guys let me know your thoughts. Or are we in an extended cycle unlike anything we've ever seen in the past? Now, the Bitcoin price languished below 100 Gs since Feb 21st, and a good deal of the momentum and positive sentiment that comprised of the Trump trade has dissipated and been replaced with the war of trade or tariff war. And again, tomorrow, big announcement from Trump regarding the tariffs and all that. And despite these overhanging factors and the negative impact they have had on the day-to-day prices, large entities continue to add to their Bitcoin stockpiles. Now, that's a great indicator because the smart money are the intelligent ones. When you see whales like MicroStrategy, now known as Strategy B, making $1.9 billion acquisitions, and Marathon, multi-billion-dollar acquisitions, and Metaplanet continuing to stack biddies and have advantageous goals of stacking 21,000 Bitcoin. There's only so much Bitcoin to go around, fam. So talking about what I just shared, March 31st, Saylor announced that the company acquired 22,000 Bitcoin for $1.9 billion at an average price of $87,000 per biddy. The same day, Bitcoin miner Marathon revealed plans to sell up to $2 billion in stock to acquire more Bitcoin from time to time. How about all the time, every damn time? And following in the footsteps of the larger cap company is Japanese firm Metaplanet, issued 2 billion yen, 13.3 million USD in bonds. And we'll dive deeper into that next. We also have GameStop announcing a 1.3 billion convertible note offering. They'll most likely make the announcement sometime this week that they just purchased 1.3 billion. They allegedly have 5 billion of cash sitting on their balance sheet, departing like a melting ice cube. So you already know where that money is going to go. The analyst also points out that Bitcoin has typically experienced two major surges within the previous acceleration phases, with the first instance of the cycle following the election. If a new all-time high is on the horizon, it'll have a starting base near 110 Gs, baby. That's a blackjack. And if you don't know, now you know. And also, massive news. Payment giant Mastercard says it wants to enable 3.5 billion cardholders. That's virtually half the population of the world to move Bitcoin and crypto. We have made a sizable bet on this. So even the old school legacy payment rails want their piece of the bitty pie. That's what's up. Now, also, as I put here, buy the bitty or die trying. Kind of reminiscent of 50 Cent album, Get Rich or Die Trying. And that's right, there may be an announcement later today. GameStop purchasing over $1 billion worth of the bitty. Now that GameStop has joined the bitty team. But you guys, let me know your thoughts. And I promised to pull up some of the live charts for you guys. So let's do that really quick. And again, welcome everyone joining us. Over 600 people already on the live stream, TriStream, live on X, Rumble, and YouTube. So as you can see here via TradingView, via Coinbase, let's start with the 1 hour and we'll work our way backwards, get some fresh perspective on the charts. Big green candle forming here today, you can see, followed by a couple of corrective little reds of the past couple of hours. We do have a falling wedge, and we also have a bull target in the red, sitting just shy of 87.5. And also in the green, we got a rising wedgie sitting at 79,000, roughly 5,000 drop from the current price action. Let me know which direction you think the pretty little bitty likely to move next. And before I flex, and check it out, rising wedgie on the 4 hour, two bull scenarios. We got one target of 105.5, and we have the teal target bullish 113.7, bear scenario sitting down at 79.3. And zooming out from the 4 hour, take a look at the daily. The daily chart says it's going up forever, JV. Rising wedgie followed by the falling wedgie. Two bull targets, one in the red, just shy of 113 Gs, which would take us back to price discovery mode. Also one at 113.7, two bear scenarios, one at 68.7, and Super Bear sitting at 49 G's, baby. And zooming out a little further, we'll check out the weekly. Weekly chart, as you can see, still has the cup and handle target, which has been here for months. Are we going to fulfill that anytime soon? Potentially here in Q2, potentially even this month of April. Happy April 1st, by the way. You guys let me know your thoughts. And zooming out a little further, we'll take a look at the monthly, and the monthly chart. Thus far green, but we're only one day into the month. Past couple of months have been corrective, unfortunately, so I'd love to see the bullish momentum continue. But you guys let me know your thoughts, and I'll read your comments out loud. Welcome everyone to the Q&A segment of the live stream. Let's go. But anyways, fam, welcome everyone again. Over 800 people here. Let's continue where we left off. Next headline regarding Metaplanet. They just added 67 million to Bitcoin following a 10-to-1 stock split. That's right. The Japanese-based Metaplanet expanded its Biddy holdings, purchasing 696 BTC for 10.2 billion yen, which is 67 million USD. Monopoly money, of course. The company announced it on April 1st. The investment lifts Metaplanet's total Bitcoin stash to 4,046, valued at over $341 million. The acquisition comes shortly after Metaplanet issued 2 billion Japanese yen of bonds to buy more of the Biddy. As reported right here, buying the dip. That's the CEO of the company, Metaplanet. Now, yeah, 0% interest. I believe they're just pulling this off using the Sailor put. It says Metaplanet issues 2 billion Japanese yen and 0% ordinary bonds to purchase additional Biddies. The move also comes shortly after Metaplanet 10-to-1 reverse stock split. The company previously warned in a February 18 filing its share price risen significantly, creating a high barrier of entry for the retail investors. Quoting them here, we implemented a reverse stock split, consolidating 10 shares into one. Since then, our stock price has risen significantly, and the minimum amount required to purchase our shares on the market has exceeded 500,000 Japanese yen, creating a substantial financial burden for the investors. That's right. The stock split aims to lower the price per trading unit to improve the liquidity and expand the firm's investor base. The 10-to-1 stock split was completed March 28th, according to investing.com. Metaplanet, often referred to as the Asia MicroStrategy, aims to accumulate 21,000 Biddies by 2026 as part of the plan to lead Bitcoin adoption in Japan. Currently with 4,046 BTC in the treasury, it currently ranks the 9th largest corporate Bitcoin holder globally, according to the BitBo data. Now, Strategy is also buying the Bitcoin dip. As I shared earlier, they just purchased an additional 22,000 Bitcoin for $1.92 billion in a single swoop. Simple. And I think these institutions, not only them, but these corporations are going to continue to stack the Bitcoin and follow in Michael Saylor's footsteps, and there's only so much Bitcoin to go around. Also, we have a very limited supply of the Bitcoin available on the exchanges, the lowest supply we have seen in years, potentially ever. So when the supply shock kicks in, pretty low Biddy going up. It's supply, demand, basic dynamics, just as per the Bitcoin stock to flow model, projects Bitcoin averaging 500,000 per coin between now and the next halving of 2028. It's due to the limited supply and massive demand. Also, there was big news that one of Trump's sons just put himself on the board of director with Metaplanet. So these companies are smart. And we also had big news yesterday, we'll touch deeper into today, that the Trump family, the two sons, Trump Jr. and Eric, just partnered with Hut 8, major Bitcoin miner, and their goal is to make the largest Bitcoin mining facility in the world. You remember Trump when he spoke at Nashville, he said he's going to make America the Bitcoin mining hub of the world. And they're putting their money where their mouth is. So game on, family. We moon tomorrow or we dump? Probably, Dan. Expect extreme volatility either way. Put on your HODL face. HODL gang, HODL gang, HODL gang. Next headline reads, Bitcoin can reduce the dominance of the US dollar, according to the BlackRock CEO, Lawrence Fink. That's right. Check this one out. The US dollar can lose its status as the world reserve currency to Bitcoin or other digital assets if the United States does not get its debt under control, according to the BlackRock BlackRock CEO Larry Fink. Fink wrote in his annual chairman letter to investors that decentralized finance is an extraordinary innovation that makes markets faster, cheaper, and more transparent. But the same innovation could undermine America's economic advantage if investors begin seeing Bitcoin as a safer bet than the dollar. Well, that's common sense. Anyone with half a brain knows Bitcoin is a safer bet than the dollar. And according to Trading Economics, the U.S. debt equaled 122% of the country's gross domestic product in 2023, and that is a considerably higher percentage than the 105% observed in 2018. Moody Ratings retains the U.S. AAA credit rating, but has downgraded its outlook to negative, indicating a possible future rating downgrade. Yeah, not surprised there. The U.S.'s Joint Economic Committee wrote, as of March 5th, the country's gross national debt was $36.2 trillion, growing $1.8 trillion, or roughly $5 billion per day over the past year, and $12.8 trillion in the past 5 years. Excuse me. The Bipartisan Policy Center warned this month that the U.S. can default on its debt as early as July of this year. It's going to be right around the corner. Bitcoin has been branded as the safe haven for investors who are looking to avoid the perils of fiat currency, including inflation. Some believe that the end of the debt ceiling suspension can lead to a Bitcoin price boom. Others think, as Fink has stated, the dangers of the national debt could increase Bitcoin adoption. Precisely. And in 2025, crypto obviously gained prominence as an asset class due to the adoption by countries such as the United States and companies like Strategy. However, some argue stablecoins could in fact increase the dominance of the US dollar. So let's discuss Larry Fink on tokenization as, what is that? Democratization. Interesting. In the letter, Fink says tokenization is democratization with the technological innovation enabling instant buying, selling, and transferring without cumbersome paperwork or waiting periods. He makes a good point there. If every asset ends up being tokenized, which I believe is BlackRock's goal, by the way, Fink said it will revolutionize investing. Markets wouldn't need to close. Transactions that currently take days would clear in seconds, and billions of dollars currently immobilized by settlement delays would be reinvested immediately back into the economy, generating more growth. Tokenization democratizes access, shareholder voting, and yield, according to Fink, and according to RWA, the tokenization of the real-world asset markets amounts for almost 20 billion USD. There are currently around 93,000 asset holders with 174 issuers. Industry projections indicate the market could reach 4 trillion to 30 trillion by the top of the decade, 2030. BlackRock's own BUIDLL, Real-World Tokenization Asset Fund, is currently the largest such fund available for trading, with Tether, Gold, and Franklin Templeton's Benji funds coming in second and third place, respectively. So what are your thoughts regarding Bitcoin overtaking the status of the US dollar as a world reserve currency? Your thoughts on that, let me know. This is pretty significant considering it's the biggest player in the world. We're talking BlackRock. And again, I believe their goal is to tokenize every asset, in which is what they're currently doing. They want a piece of every pie. My understanding is 90% of all the companies plus in the S&P 500, BlackRock is one of the primary shareholders of. It's like Vanguard and BlackRock own a piece of literally everything. It's crazy. Now let's discuss the major news of the Trump family launching American Bitcoin mining venture in partnership with Hut 8. This news broke yesterday. The publicly traded Bitcoin mining company, Hut 8, partnering with U.S. President Trump's family to form a new mining subsidiary called American Bitcoin. American Bitcoin, let's go. In a new announcement, the Florida-based Hut 8, Hut 1, Hut 2, Hut 3, Hut JV and Nipsey live and uncut says it is merging the majority of the ASIC mining operations for an 80% stake in the American Bitcoin, a company formed by a group of investors, including the president's son, Eric Trump, and Donald Trump Jr. American Bitcoin was formerly known as American Data Centers, Inc. And here's what Trump Jr. had to say. From the start, we have backed our conviction in Bitcoin personally and through our businesses. But simply buying Bitcoin is only half the story. Mining it on favorable economics opens up an even bigger opportunity. Eric Trump will serve as the American Bitcoin Chief Strategy Officer as the company aims to becoming a publicly listed company. Mike Ho will serve as the Executive Chairman, and Matt Prusak as the CEO. We also have Asher Janut, CEO of Hut 8, describing American Bitcoin as a pure play mining platform built for exahash growth, Bitcoin production, and operating leverage. Hut 8 plans to host an April 1st conference call to discuss the subsidiary launch. Here's what Hut 8 is quoted sharing. Initially, American Bitcoin's results will be consolidated within the company's financial statements for reporting purposes. Hut 8 will serve as American Bitcoin's exclusive infrastructure and operations partner through a series of long-term commercial agreements that will generate stable, contracted revenue streams in Hut 8's power and digital infrastructure segments. And if you don't know, now you know, broskies. All right, next story of the day, fam. Here's the latest from Arthur Hayes, just Blaze, who was officially pardoned by Trump alongside two others from BitMEX. He's the BitMEX co-founder, which used to be the largest Bitcoin derivatives exchange. I don't know if it still is, but I think he stepped down after all the shenanigans took place, but I digress. Headline reads, Arthur Hayes predicts 250,000 Bitcoin price as Fed caves to the QE pressure. That's right. In a new essay published March 31st, Arthur Hayes lays out a case for a 250,000 Bitcoin price target by the year end, grounded in his belief that the U.S. Fed has effectively capitulated to fiscal dominance and resumed de facto quantitative easing for the U.S. Treasury markets. Let me know if you agree or disagree. The essay, laced with vivid satire and underpinning the rigorous macroeconomic analysis, argues that the Fed's recent shift in policy signals a structural return to fiat liquidity expansion, an environment historically beneficial to the Bitcoin and other hard assets. Powell proved last week that fiscal dominance is alive and well, according to Hayes. Therefore, I am confident QT, at least regarding the treasuries, will stop in the short to medium term. Bitcoin will scream higher once this is formally announced. Hayes centers his argument on the Federal Reserve's March FOMC meeting, during which Chair Jerome Powell suggested the balance sheet reduction, or quantitative tightening we call QT, which would slow down considerably. Powell stated, "We strongly want the mortgage-backed securities to roll off our balance sheet at some point. We would look closely at letting the mortgage-backed securities roll off, but keep the overall balance sheet size constant." The policy configuration, dubbed the QT twist by Hayes, implies the Fed will reinvest the MBS runoff proceeds into the U.S. Treasuries, thereby supporting the bond prices while holding the nominal balance sheet steady. Hayes characterizes this as a Treasury QE, even if not labeled as such. If the Fed balance sheet is kept constant, they can buy max $35 billion per month. I repeat, max $35 billion per month of treasuries, or annualized $420 billion. Happy 420, broskies. Hayes calculated. I know he's a fellow 420er. In addition, the tapering of the Treasury QT from $25 billion to $5 billion per month represents an annualized $240 billion positive shift in dollar liquidity. To frame the Fed's political constraints, Hayes invoked a satirical dialogue in which Powell is subjected to humiliation by the Treasury Secretary Scott Bessent, a fictionalized dramatization that underscores the subordination of the monetary policy to fiscal necessity. In this theatrical allegory, Powell is told by Bessent next week at the FOMC, "You are going to start tapering QT for my Treasury bonds," and announce that QE for Treasury bonds will start in the near future. Do you understand? Now, Hayes reinforces his point by drawing historical parallels to Arthur Burns, the Fed chair during the inflationary 1970 period, who admitted in his 1979 speech the anguish of the central banking that political pressure rendered the Fed powerless to stop inflation. He also wrote that the Federal Reserve was itself caught up in the philosophic and political currents that were transforming the American life and culture. Monetary policy came to the governed by the principle of the undernourishing the inflationary process while still accommodating a good part of the pressures in the marketplace. And again, if you don't know, now you know. And also as a bonus, I'll share this really quick from Ash Crypto. Bitcoin copying the 2017 move. If history repeats itself, Bitcoin will hit 150 to 200,000 easily by the end of 2025, right in alignment with Hayes ultimately calling for 250,000 by year's end. All right, fam. Now for our feature story of the day. The Bitcoin Policy Institute released a framework for the United States to buy $200 billion worth of Bitcoin by issuing $2 trillion worth of BitBonds. That's right. Let's break it down. I'll read it for you, and straight from the horse's mouth, and then we'll dive into the story, which was featured on the Binance website. So as you can see here, the BitBonds framework, Bitcoin enhanced treasury bonds operate similarly to conventional treasury securities, but with an embedded Bitcoin component that transforms their risk-return profile. The U.S. Treasury would issue Bitcoin bonds with a stated face amount. For an example, maybe 100, I don't know, whatever, 100 million, billions, whatever, and maturity, for instance, 10 years. And unlike traditional bonds, where all the proceeds go to general funding, a fixed portion of each BitBond, which would be 10%, would be used immediately to purchase Bitcoin for the Treasury Strategic Bitcoin Reserve. The remaining majority of the proceeds, 90%, still finances the government operations in the typical usual way. As you can see here on your screen, building the Strategic Bitcoin Reserve. The total to Bitcoin would be 200 billion, which is 10% of the 2 trillion, and they'd be able to purchase up to 2.22 million BTC, hypothetically at a price of roughly 90,000 per Bitcoin, which is roughly 5,000 above the current spot price. And under the structure, if 2 trillion worth of the Bitcoin bonds were issued, roughly 20% of the 2025 refinancing needs, that would mean $200 billion would be invested into Bitcoin, securing approximately 2.2 million BTC at roughly 90,000 per coin for the National Reserve. This allocation balances strategic Bitcoin exposure with conventional Treasury functionality. Bitcoin for the Treasury, Bitcoin for my enemies, Bitcoin for the Kennedys, Bitcoin over Hennessy. And another headline here from Binance, USA's bold move, $200 billion Bitcoin purchase through the BitBonds. Some of the highlights again, the Bitcoin Policy Institute recommends a 200 billion Bitcoin acquisition. BitBonds would serve as a strategic financial instrument. The proposal could boost the U.S.'s digital asset holdings. And let's not forget, Saylor also recently proposed to Trump during the Crypto White House Summit, the very first of its kind, for the Trump administration to purchase up to 5% of the circulating Bitcoin, which is 25% of the circulating Bitcoin supply, which would be over 5 million Bitcoin. And they'd be able to do that just by trading their gold reserves for Bitcoin. So there's a lot of different ways to do this budget neutral strategy of acquiring the Bitcoin. And Bitcoin bonds is another example. The game-changing Bitcoin investment proposal, the Bitcoin Policy Institute, BPI, unveiled the groundbreaking framework advocating for the U.S. to purchase 200 billion of the BITI, suggesting acquisition facilitated through the BitBonds, an innovative financial instrument designed to merge traditional bond markets along with digital assets such as the Bitcoin. And understanding the BitBonds and their role, BitBonds operate as government-issued bonds backed by the Bitcoin reserves. This mechanism allows the U.S. to leverage the strength of its financial system while gaining exposure to Bitcoin. The move would diversify the nation's reserves, hedge against the inflation, and align with the growing trend of Bitcoin adoption globally. To transcribe that into layman's terms, winning, winning, winning. BPI's proposal also highlights the importance of maintaining a competitive edge in the blockchain space. By incorporating Bitcoin into its financial strategy, the U.S. could enhance its position as a leader in digital asset regulation and innovation. And this was the big news. As I mentioned, I already read you the headline here on X. So the 200 billion Bitcoin acquisition would significantly impact the crypto market, drive an increased institutional interest, and additionally, establishing the BitBonds would create new financial opportunities, fostering public and private sector collaborations within the blockchain industry. And while the proposal will undoubtedly face regulatory scrutiny, it opens the door for further discussions on integrating Bitcoin into the national economic strategies. Policymakers will likely weigh the potential risk and rewards before making any massive decisions. The post-USA's bold move, 200 billion Bitcoin purchase through the BitBonds appeared first on Koino Media. That's where the news was broken yesterday. So you guys let me know your thoughts. Do you think the United States and Trump would follow a proposal like this to adopt Bitcoin through the use of these BitBonds? Do you think they'll end up adopting Bitcoin by trading their fool's gold? And I say that because gold is the poor man's Bitcoin. For the apex predator, the hardest asset to ever exist. There's so much bullishness in the markets right now, I can't contain myself. But you guys let me know your thoughts, and I'll read them out loud. Welcome, everyone, to the Q&A segment of the live stream. Yabba dabba doobie. Shout out Chris Clean. Just pollinated some gators. New seeds or strains are incoming. Music to my ears, broski. Shout out Roselle. Beauty pump bebe. That's right. And we're going to flip this mofo into a pump watch. You guys want it? You got it. We're going to jam out to some Chandy Jams. Let's pull up some of the live charts as Bitcoin's reacting in the markets right now. Pretty bullish, up 2 Gs on the day, which we love to see. So let me pull up the charts. And again, this is the Q&A segment of the live stream. I'm going to stick around a little longer, and we'll keep the stream running all day, and we'll see how high we can pump as we jam out to some Shandy music.